Did Saylor just predict $400 trillion Bitcoin? Yeah. And Strategy just pulled off something that I don't think anybody saw coming. They raised and purchased $1 billion worth of Bitcoin in just 1 week. If you extrapolate that out, that means they will buy 5 times more than all of the Bitcoin mined this year. And yesterday's shareholders had something to say about that. Chump change. Yesterday, they had $1.1 billion in volume alone. Saylor might have just issued the supply shock that shorts didn't see coming. MicroStrategy is just 8 days away from surpassing BlackRock as the largest Bitcoin holder in the world. In an interview with Bankless, Saylor breaks down the strategy behind Stretch and why it's the Trojan horse making Bitcoin the global reserve currency of the world, while no one was paying attention. He predicts why Bitcoin becomes a $400 trillion asset over the next 20 years, why we're going to be much higher the rest of the year, and why Stretch is the biggest revolution in finance. We got a lot to cover. This is Dante Cook with Bitcoin Simply. Let's go. All right, let's get into it. Bitcoin is on a tear right now, smashing through 73, 74, 75K like it's nothing. Peter Schiff is in tears right now. And it's because Strategy is buying 5 times the amount of Bitcoin being mined every single week. And Michael Saylor says this is just the beginning.
Where do you believe the price of Bitcoin will go?
Well, I think it's going up. Like I've said, I've got a 21-year view. And my 21-year view is that over the course of 21 years, it's going to average about 29% ARR. It's going to decelerate. It's been growing a bit faster, and it will decelerate to grow a bit slower. I think the past 5 years is like a 37% annualized growth rate. So if it moves from 37% down to 20%, you'll get some blended rate. You'll get a blended volatility. And I think, where are we right now? I think it's oversold. So I would expect that Bitcoin will be much higher by the end of the year.
Higher, yes. But how much higher?
Okay, so at that level of growth, like the 20-year time horizon, what price does that get us to for Bitcoin?
Oh, I think eventually it's going to 21 million a coin.
21 million a coin. Okay, so what's that, like a market cap of like 400 trillion, something like this?
Yeah.
400 trillion.
I think it's going to emerge as the dominant digital capital of the world.
If you want to know why Bitcoin is ripping, 2 words: supply squeeze. Yesterday, Strategy bought $1 billion worth of Bitcoin, funded all through Stretch. 0 dilution to shareholders. Just a week ago, their purchase was 75% Stretch and 25% issued through MicroStrategy shares. This week, they acquired 13,927 Bitcoin with preferred stock cash. Here's what this means in practice. Strategy built a Bitcoin acquisition machine that works without touching the equity of common shareholders. Strategy pays an 11.5% dividend, doesn't convert that to shares, and fixed income investors are happy because it's higher than any comparable bond yield that they can get in the market. The Stretch investor gets yield, MicroStrategy gets more Bitcoin per share. Everybody wins. This is creating the supply shock of all supply shocks.
Like 2-3 weeks ago, we sold $1.2 billion of it. When we sell $1.2 billion of STRC, we buy back $1.2 billion of Bitcoin. And that week, we bought 5 Bitcoin for every Bitcoin mined, or some insane amount. If we sell $10 billion of Stretch in a year, we're going to buy the entire supply mined by the miners. When we sell 20 billion, we'll buy 2x the supply. So the formation of those digital credit networks will facilitate a huge amount of capital flowing into the system.
Right now, Bitcoin adds about 450 new coins a day, 164,000 coins a year. That's roughly $11 billion of supply at a 70K price. Stretch just did that amount of volume in a single day. Strategy used that to buy over 10,000 Bitcoin, 13,927, which is more than what miners produce every single day. This is the supply squeeze. If you extrapolate that out, 365 billion in a single year, I know it's not going to sustain that kind of volume. What you see is millions of coins being purchased against a shrinking supply of Bitcoin. This is what a structural supply shock looks like. But Saylor told us he was going to do this and nobody paid attention.
We're not stopping. For those people that we have buyer fatigue, we don't have buyer fatigue. I think that we can buy more Bitcoin than the sellers can sell, and we're going to take it all, and we're going to take it out of circulation.
Stretch has introduced a zero volatility way for people to accumulate yield and for Strategy to accumulate Bitcoin that wins for everybody. But there's also an amazing tax benefit that nobody is talking about. Here's what a return on capital investment looks like.
The real brilliance of the business model is you're acquiring a capital asset that you're holding in perpetuity and you're never realizing the capital gain on it. If you pay the dividend by remitting the unrealized capital gain back to the credit investor, the dividend becomes a return of capital dividend, which means it is also tax deferred. So the basic principle is I'm entering into a capital investment that I expect to hold in perpetuity, and I'm paying a dividend on the unrealized capital gains through issuing a derivative instrument that allows the credit investor to collect dividends for a decade, tax deferred. And should they die and pass that credit instrument to their heir, they get a step up in the basis. So you could be a retiree, collect dividends for 10 years, not pay tax, pass it through to your heir. They get a step up and they get 10 years of dividends that are also tax deferred. So the thing that makes the entire structure work is that you're making a capital investment for a credit investor and you're absorbing the uncertainty of the future and the volatility of the present on the balance sheet of the common equity in order to strip the risk and strip the volatility from the credit investor's portfolio. And the credit investor is paying you handsomely for that, right? And everybody's getting what they want, right? The capital investors in Bitcoin get a benefit. The equity investors in strategy get amplification of Bitcoin, and the credit investor gets that stripped down, low volatility digital, instrument, digital yield instrument.
Hold on. I don't think people understand what he means when he says tax deferred. This is Bitcoin simply, so I'm going to break it down for you. Most high yield stuff pays you taxable income every single year. With Stretch, that 11-ish% is classified as return on capital. This means that the cash that you get in your account from this equity instrument doesn't get taxed today. Your cost basis just gets marked down every single year, meaning that you won't have capital gains at 11.5% with the price of Stretch at $100 and the dividend yield being at about 11.5%. This means that you won't have capital gains taxes for roughly 9 years. When you eventually sell at that point, all of it will show up as capital gains, but then it will also be taxed at the long-term capital gain rate. The real genius behind the strategy that nobody's talking about is that after 9 years, if you pass this asset to a family member or one of your kids, they will get a step up in cost basis, meaning that they will have another 9 years to get dividends tax-free, meaning you'll be able to earn 11.5% in perpetuity without any taxes. Speak with a tax lawyer, but this is how this works in my mind. And with this, it's only natural to ask, this is too good to be true. There has to be some risk involved. Strategy must be taking on margin in order to get this pulled off. Well, that's exactly what the Bankless team thought. And here's what Michael Saylor had to say.
Okay, so to your point with gold, I mean, this would have worked marvelously with gold. I suppose the bet is the capital asset, the asset, the scarce asset that you're accounting on for this type of accumulation strategy. The core bet is that goes up relative to dollars, or dollars go down relative to that. I mean, gold from the 1930s to now is up about 120x. So it would have worked very well with gold relative to dollars. But aren't you as well putting some margin in the company itself or in the structure itself? And can't you get bitten by the volatility across those years and decades with too much margin? Like, there's almost a question of how much margin is too much for you to weather.
Ryan, there is
storms.
no margin. There is no margin in the capital structure. Let me make a point. Margin loans are when I borrow against an underlying asset with the obligation to meet a collateral call on 1 or 2 days' notice. So margin debt is 1 day money. And if you actually borrowed against the underlying Bitcoin, if you're a retail investor, you're basically borrowing the money for a day. And when you have volatility, that creates a lot of anxiety. When we sell STRC, we're selling equity. It's the exact opposite. If you give me $1 million for my equity, for common equity, I have the money forever with no obligations. Okay, that's the longest duration money. When you give me $1 million to buy a preferred equity with a variable dividend, if you read the securities document and you understand what that security is, you're entering into a perpetual swap. I am agreeing as the issuer to give you SOFR, the standard overnight funds rate, plus a credit spread determined by the company. And you are agreeing to give the company that capital forever. And so that, and you're not getting the money back. So it's not an overnight loan. There is no collateral call. You have no redemption right. Yeah, you can't, it's not like you can go to the bank and say, give me the $1 million back tomorrow. In fact, you're not getting the money back ever, right? It's an equity investment. If you wish to sell the instrument, you can sell it into the market, but you're selling it to other investors. And so the magic of this structure is you're creating a perpetual swap that's got stochastically, if you were to actually do the statistical modeling, it's more like a 20-year duration instrument.
You agree to loan the company money in perpetuity that they don't have to pay you back. You can sell your shares, but you're selling them to someone else who is, again, agreeing to loan the company money in perpetuity. And this is why this is the ultimate Bitcoin acquisition machine. But we're going to talk about not only what this means for your checkbook, for your taxes, like we just covered, but also for the world, right after we thank our sponsors. One of the sponsors of this show is Ledn, the leader in Bitcoin-backed loans, which allows you to pull off the Saylor strategy, but for yourself. Never sell your sovereign Bitcoin. You borrow against it. You post your Bitcoin as collateral, and Ledn gives you 50% of that value with no capital gains taxes. Rates are between 9.9 and 11.49%, and you can repay them at any time with no credit checks or fees. Be your own bank, never sell your Bitcoin, and never incur capital gains. This is the ultimate hack. Use the links in the show notes to get started with Ledn today. And the Bitcoin way is the way to help you become fully sovereign with your Bitcoin and your Bitcoin journey. Teach all of your family and friends exactly how to access the Bitcoin that you've been stacking for them and your future grandchildren on your behalf, privately, safely, securely, and confidently. Schedule a meeting with a team and they will hold your hand and walk you through exactly how to do this. How do I hold my own keys? How do I secure them? How do I set up multisig? How do I run a node? How do I send a transaction? All of these things are important for you to maximize your Bitcoin on your journey. Use the link bitcoinaway.com/partner/Dante-Cook and tell them I sent you. Let's get back to the show. At the end of the day, people are just worried about whether they're going to have enough. If you're retiring, will I have enough to cover my income, my bills, and my expenses when I'm not earning an income as a retired person? If you're a person that's still working, will I have enough to pay for my bills when the cost of inflation, the cost of my rent, the cost of my utilities, the cost of my insurance is going up faster than the paycheck that I'm earning? That's the fundamental question that people want to answer, regardless of what life stage that you're in, regardless of what country you're in, regardless of what geographical boundaries that you live within. And this is why this product is able to serve 1 billion people, as Michael Saylor puts it. Fix the money, fix the world.
And so here's the very simple idea, right? How do you make the world a better place? You provide a utilitarian value, something valuable to 1 billion people that everybody just agrees on. And so, you know, with Rockefeller, it's like kerosene, gasoline, and everybody just lives a better life. And then with Ford, it was an automobile. And who doesn't want an automobile? And then Jobs gave 1 billion people an iPhone. Nobody just wants an iPhone, you know? And then we had like electricity, you know, and so we like those things. So what is the equivalent in the digital asset space? And the answer is, everybody would just like a bank account that pays them more than the inflation rate. Like, how about give me a bank account that pays me 8%? Right now, your bank pays you 0, right? The money market pays you 3.7% before tax. If you live in Japan, it's 50 basis points. If you live in Switzerland, it's nothing. So what is the idea? Well, I would just like Social Security, or I'd like to live comfortably ever after. I'd like, you know, what we say tongue in cheek is fix the money, right? How do you fix the money? Well, Bitcoin people have been thinking about how to fix the money. And I think what we've realized is the way to fix the money is to integrate the promise of technology. What does Bitcoin represent? It represents digital capital, digital, something that moves at the speed of light to 1 billion people. Capital, scarcity, right? It represents a capital asset with integrity. So how do we fix the money for 1 billion people? And what we realized is the answer is not convincing 1 billion people to adopt Bitcoin as the currency instead of the dollar or the yen or the euro. And the answer is not getting them to, throw away their bank, replace the government, rethink their world, disclaim interest in all corporations and self-custody, right? These are all crypto ethos things. And it's not that I'm not negative on them. They're all valuable. But I think after 5 years, and believe me, I preach Bitcoin to more people than, anybody, it's 1,000 hours and you're going to convince 1, 2, 3% of the people to put 5% of their money into this asset. You're not going to convince 75-year-old retirees, right? Nor should you. So what's the great product idea? Wouldn't it be great if I just bought a product and it paid me money for the rest of my life? Like, I just want 10%, a bank account that pays me 10% or 8%. If the natural organic inflation rate is 7, and I think you can make the argument, and I've made this argument with you guys probably in the past, over 100 years, the natural currency debasement rate is about 7%. And so if your money is paying you more than 7%, then you're keeping up with the cost of living. And if you're getting 2%, you're getting debased and you're getting poorer. So how about bank accounts that pay 8% to 1 billion people?
I've never thought of that. An honest capital instrument that offers the average person a rate of return greater than the rate of inflation, which is created by people that we didn't elect, that we didn't put into office, and that have no accountability to our needs or our desires. What a novel idea. But here's the part that made me think that Bitcoin is going to become the global reserve currency of the world. And it's going to be done through a Trojan horse backdoor way. Listen to what Saylor has to say.
How do you create that? So we create a credit instrument and we strip the vol off of it. We offer 11, but if you're a bank in Australia, you could just take that 11 and you could pass through 8, convert it to AUD. And if you're a bank in Europe, you could offer 6 or 7% in euros. So we basically create digital credit and we offer it to Deutsche Bank and JP Morgan and Commonwealth Bank and Morgan Stanley and BlackRock and Vanguard. And if people, if you think of it as just high-powered money, what is high-powered money? It's a unit account, a store of value, a medium of exchange. Well, stable coins proved that they were a medium of exchange and unit of account, but if we cripple their ability to pay a yield, they're not a store of value. So I want something that's stable to the dollar, but I want it to appreciate, ideally tax deferred, more than 7%.
That's the gangster move. They're going to start offering this to banks and other people whose clients are going to want a piece of that 11.5% dividend yield. So effectively, the banks are going to start taking a spread on Stretch, offering their customers a lesser rate, which is higher or more than double the amount of SOFR plus 2.5% that they've been offering. And in doing so, their customers, without knowing, are creating more of a supply shock on Bitcoin, which is driving even more volume into Stretch. That's the Trojan horse for Bitcoin to take over the world. Even without this, Bitcoin has been by far the fastest asset to reach $1 trillion and $2 trillion. Saylor thinks we get to 21 million or a $400 trillion valuation. And in order to do this, MicroStrategy just needs Bitcoin to grow at 2.05% a year in order for them to pay these dividends forever. In effect, creating an infinite perpetual money machine to acquire Bitcoin to apply the supply shock of all supply shocks. This is giving the world a digital capital, an honest digital yield, and a way to outpace inflation. The revolution is just beginning. But you're going to be on the front and bleeding edge of this if you subscribe to this show. Subscribe to the show if you already haven't. This is Dante Cook with Bitcoin Simply. Happy stacking. And if you haven't started accumulating Bitcoin beyond just buying spot, well, you can get into buying Bitcoin through Bitcoin mining. We talked about a way how through Stretch allows you to have a return on capital or deferring your capital gains to some point in the future. You can also offset your capital gains by buying assets that you can depreciate, like you can with Bitcoin miners. Work with the team at SAS Mining and they'll talk to you all about this. Give money to the team at SAS Mining. They help you to buy and own a Bitcoin mining machine. They keep it up, they keep it repaired, they host it for you on your behalf, and they send sats directly to your wallet. There's no easier way to stack sats and an easier way to get a tax benefit. This is Dante Cook with Bitcoin Simply. We're out.